start the recording. All right, guys, welcome back to another Sunday breakdown webinar where obviously we got to look at what happened last week and prepare ourselves for the rest of this week and what's going to go on within the markets. So you always want to look at the markets and prepare for the weekly timeframes and do your top-down analysis. So let's start off with GJ because GJ is most likely what I'm going to be trading tonight. So when it comes down to GJ, let's actually check the monthly really quick. So the thing with GJ is we are trading at this key level being 156,500, call it, right? Whereas you guys could see over the last few months, price has been able to reject this level and price has been maintaining itself under this area. There's a lot of weakness at this area. And there is a lot of selling pressure here. So I am on the buy side of where I'm going to be looking for sells. But at the same time, looking at this current weekly time frame, what we can actually see is that price so far has actually rejected our level of resistance. But there was a lot of weakness to the downside here, which is quite concerning. But notice how price on the weekly time frame has also rejected the highs over here. Only thing is, if we look at it, what price could potentially be doing is forming an ascending wedge. So an ascending wedge simply shows us, or is a pattern that we've seen throughout the market's history, where it forms at a level of resistance and it forms when resistance is typically going to break. So what we could see here is a higher low point, and what we see here are just highs being formed in the market. Now, I don't want to make a decision on overall direction just yet. Let's go down to a daily time frame and see what the daily is doing. So if we look at the daily time frame, obviously, let's actually keep the chart at this area here. What we have here is resistance, we have support, we have resistance, and then support. So price so far has actually closed above support. We all, or the majority of us should have caught the sells last week. Right, that's something that we've broken down, and we broke that down to the T. But now that price has actually rejected this area of support, what we could potentially look for is for GU to continue to trade higher, probably back up to resistance, especially if GU actually does break above this resistance level that we have here, where we have our previous level of structure. We're most likely going to come back up into this area here. So we're looking at a potential 100 pip range. Now, price can always reject this area of resistance as well. Let me clear my drawings, right? Because this is structure. We do have the cross of the moving averages, and we could ultimately see price continue to trade lower. As long as price maintains under this area, typically we're going to be looking to go short. Now, what we see so far with price is that price has broken under support here, but now we've actually broken back above, and this is the importance of time frame correlation, right? You look at the weekly time frame or the daily time frame, apologies, and price never broke under support. It pierced under support, but then ended up closing right back above. Hence why we could potentially see buys. We could potentially see GJ go up because this is a very, very weak bearish candlestick on the daily time frame. This is not a good sign for GJ to continue to go down and see this much rejection at support. So right now I'm leaning more on the buys. Right now, what I really want to see when it comes down to the buys is this level being broken. So once price can actually break above this level of resistance, then we'll see price continue to trade higher. We could play this. Out in multiple ways. Let's check the lower time frame, see what the lower time frame is doing. So the first setup is already playing out. Right. One thing, especially if you're a returning student and you've been to all the other webinars, is once price breaks back above support or resistance, wait for it to pull back into that area where you then look to buy and look for that continuation pattern. What we could also potentially see forming here is this inverted head and shoulders that could also play out as well. I want to see what happens during the London session, but this would be a pretty nice inverted head and shoulders for price to ultimately go right back up. So we could wait for price to try and pull back into this level again for some form of a retest where we'll then look to buy. And then we have two ranges that we'll have if we do take a buy. The first one is from support to its nearest resistance, which is about 46 pips. The second one is from this resistance back up to the highs, which is about 90 pips. So we're looking at two ranges here. What we can also see is the other time frames starting to, or the lower time frames, not other time frames, starting to cross over. Essentially, what we're looking at potentially is a trend change on these lower time frames, right? So essentially what price was doing was forming lower highs, lows, lower highs, lower lows. And now price is starting to break above its original highs, forming new highs. And now we formed a higher low point here. Now we formed a higher high. So we could see price continue to trade higher. There's a lot of signs that we could actually see price go bullish. The main signal is on this daily time frame. Now, the only thing that concerns me about actually looking to take buys is where we are on the weekly. We know we're at a level on the weekly time frame, but at the same time, looking at this daily structure, we definitely could go back up into these highs up here. So into this zone where we could see GJ potentially travel back into, especially if we get a bullish engulfing here on the daily time frame, right? Let's say this day closes, so tomorrow 5 p.m. there's a bullish engulfing. Easy, that's a pretty easy play. Wait for price to pull back into support, make that little higher low, and then look for the next day to go bullish back into resistance, which will then there, we'll have to reanalyze and see what price may do. So that's what I'm kind of looking for on GJ. GU, there's nothing to do on GU. I really haven't even traded GU, but one thing that I did discuss is that we could potentially see price pull back from this area over here. And this area is a level of structure on this 4-hour time frame. If we go to the weekly time frame as well, we have this weekly structure. So the thing with GU is on the weekly time frame, right? Structure so far, if we look at it, is forming lower lows and lower highs. So this could potentially be a lower high point on the weekly, especially if this weekly time frame actually comes down and forms this bearish engulfing, then we should see price continue to trade lower. One thing we could also look for, since we are at a monthly level of resistance, is notice how we have a retest here, a high, we have a head here, and we could have a right shoulder here. So we could see GU come down back into this area over here and form that inverted head and shoulders for then price to actually continue to trade higher. That's kind of more predicting and not really following price, but that's definitely something that could play out, especially with how steep this trend is. Now, let's take a look at the trend and notice some market conditions. Look at this trend here and look at this trend here, right? This trend had very nice lower lows and lower highs where we could take advantage of the majority of the time. This trend was just a straight shot up, meaning that this is one move. This isn't where price is pulling back and making those lower lows and or higher highs and higher lows. On the 4-hour, yes, it is, but on the daily, there really is no structure. We just have some internal structure. So this really is the first leg in a potential 3-leg extension. Now, where can we see that leg actually end? Ultimately, it's up to price, obviously, right? Our job is to try and determine where we could see price actually end on this or pull back to the downside. So what we can do is pull out our Fibonacci retracement tool, and what we see is the 50 and 618% all in the same zone as our previous level of support over here, right? So it is looking like we could see price actually go down. Does that mean you have to wait for price to actually go all the way back into the zone before looking to actually start buying again? No, of course not. You can always trade based off of 4-hour structure. If you're starting to see lower lows and lower highs on the 4-hour time frame, then take advantage of that trend. Right, so let me get rid of this here really quick. Let me let them in. So what we could see if GU were to actually start pulling back into this zone is pretty simple, right? What we'll see here is a counter trend on the 4-hour time frame. So notice that we do have this double top here. We have the break of the neckline here. We could potentially, this could potentially even be a lower high on the lower time frame if you check like a 30-minute time frame, right? So what we'll see essentially is price actually forming lower lows and lower highs, probably back down into resistance where we'll consolidate and then continue to trade higher, right? So I don't really have an analysis for GU other than that. I'm not looking to trade GU either. We do have to be cautious for price to actually pull back into this area because we also, looking left, have major structure right here. Notice the rejections of this area. So the probability for price, now that it's broken above, to come back into this area where we could also look to buy from here is definitely possible, right? Again, you just want to wait for the candle confirmation. And I don't really like to use the word confirmation, but once you see those candlestick patterns at these levels of support, at these levels of resistance is typically when you'll have the higher probability of price actually going in that favor, right? So now let's check silver. So silver was very interesting to see how it played out during the New York session on Friday, right? So if we look at silver again on the weekly time frame, what we see is silver rejecting that area that we've been talking about for quite some time, this daily level of support. So we have our lowest lows being down here, right? Lowest low here, lowest low here. This is the lowest point price actually got since September of 2021. Now that it is a new year, we could see price actually pull back down and make lows. Also pay attention to detail. So let me actually get rid of some of these drawings here, right? You got to pay attention to the details within the candlesticks themselves. Notice how on the daily time frame, price actually pulled all the way back to these highest closes over here, or technically it is a lower high point, but this is the highest close and this is a level of resistance here on this weekly time frame. Notice how price actually came all the way up into this area where we then saw selling pressure and we saw that pullback there. So these are little things that you always want to have marked off on your chart. So what I'm going to do simply is mark it off right here, just so I know that that is the weekly highest close. Little things that can also help you out is by simply adding text to that trend line, so you know that you're never lost in that type of situation. So what we're going to do here is add weekly HC for weekly highest close, right? And you can always just have that text there, just so you know where you're always going to be at all times in the markets, right? Now, what we could also do, or no, what we have to do, go down to the daily time frame and see what the daily time frame is doing. So clearly price had pulled all the way back up to our weekly highest close, where we have daily resistance here as well. We know these are our weekly highs. Well, theoretically, these are the highest up here. This is the highest point price has reached, right? But we know this is a level of resistance, and we know that there is selling pressure in this area. So let's look at price action on the daily time frame here and what it's actually doing. So price went from making higher highs and higher lows to now making a higher high up here and then a lower high or a lower low point here. Notice how, again, this wick went way lower than the previous wick, meaning that the following trading session, price continued to actually trade lower, and we had a retest of this area all the way up here. Now, going down to a 4-hour time frame, what we see essentially here is price rejecting this 4-hour level of resistance. Notice the break of this 4-hour support here as well, and notice how price just continued to trade lower after that. The probability and the likelihood of price continuing to trade lower is a lot higher. Now, where price is most likely going to struggle is going to be in this area over here, just like it struggled here for 2 days for it to break above. Once it did break, it pulled back into the zone, retested, and that's where I had caught this move off of the simple break and retest. And again, the concept is the same. You want to take the same concept and move it over to different currencies and different pairs that you're trading, just like with GJ, right? If price is going to continue to trade higher, I want to wait for GJ to actually pull back into this level of support, establish that support is actually being held before I take that buy position. Because what could happen is you could take a buy right here and put a stop loss here, but GJ go back down and continue to actually just trade lower. And that there is a big probability for that to happen. But if we wait for price to actually come down into support, we establish that support is holding, then at that point in time, you have a higher probability that price is going to go in your favor. And that's what we want to trade off of. We want to trade off of probabilities, not just what we think that price is going to do. Going back to silver, what we can also see on a lower time frame, again, we've already identified that price has broken structure from this 4-hour time frame, and most likely we're going to continue to travel down to here. Here we have to wait and see what actually does happen, right? Let's go to the lower time frame. So if we look at this hour time frame, what we do see is market structure here quite nicely. So we have ultimately support. Let's say support is actually right here, right? Notice the break of structure. Notice the cross the moving averages. Notice how price made this high, then made this lower low, then a lower high point here. Then we made a low. Now we've made a lower high, and most likely price is going to continue to travel down into this area. So it's going to be one of two things. Let me go back to the daily and see what the daily is doing. It's really going to be one of two things. I personally do see price actually coming back down into this 22 level I do see price actually doing that. Just because again, structure on this daily time frame is holding quite nicely. Remember, market structure is all the same no matter the time frame, right? If price is trending bearish and price has pulled back to an area of resistance and it's already rejected it, since price is trading downwards and price is trending downwards, price has a higher probability of continuing to go back down to its original lows, where we then have to wait and see, is it going to break or is it going to reject and go in the opposite direction again? And where is it going to travel to? Then that's when you have to, again, look at your levels, look at structure, and make that determination that, hey, price is going to go back up to this area here, right? So when it comes down to silver, I do see price coming down into this daily level of support yet again, maybe not all the way down here, but definitely within this vicinity over here. Now, how could we take advantage of this? You could do it one of two ways. I see the best way possible, especially you don't want to be trading gold or silver today, because again, it's Martin Luther King Jr. Day on the 18th, and there is going to be a bank holiday tomorrow from what I was reading up on. I'm going to verify this information, let you guys know, but I'm pretty certain that there is going to be a bank holiday on the 17th, right? So, you know, the holiday periods, the markets could be a little bit choppier. And when there's random holiday, well, not random, when there's holidays like this, personally, I tend to stick away from the markets. I won't trade US markets. Pretty much anything that has USD in it, I won't trade it. So I'm going to be mainly putting my efforts towards GJ tonight. But again, it's, you know, it's a weekly outlook. We have to look at what the market's doing and have an overall analysis for how the week is going to play out. Obviously, things could change as time continues and as the charts actually start to play out. But overall, it's really all the same, right? And that's the thing about being a trader. When you're actually making an analysis so early, like at 8 o'clock at night, you have to be able to adjust and adapt to different market conditions. Because I could be telling you guys right now, yes, we're going to be looking for buys on GJ, but then price actually pulls back into this area, comes up to here, retests this level, and continues to trade lower. At that point in time, my bias is going to be, I'm going to be going short. Where? We're going to go down short to this area here. It's all possible. And these are things that you have to be, as a trader, you have to be able to adapt to the different market conditions and be able to make decisions on the fly, especially if you're scalping. You have to be able to make those decisions very quickly, right? Now, when it comes down to silver, again, there's multiple ways you can play this out. I wouldn't recommend trading. So this first setup really wouldn't be the best. It's waiting for a break and retest of this level of support and looking to take price down to here, right? But, you know, waiting for after the holidays, price is most likely going to be down in this area anyways, right? So I'm going to clear this. What I had said previously with this setup is if price breaks above this level of resistance, most likely we're going to continue to travel up, right? Don't get FOMO, just wait for the pullback, wait for the break, wait for the retest, right? Imagine all the people that took buys here and initially got stopped out because price actually ended up pulling back into the level of support. You want to wait to buy at levels of support and sell at levels of resistance, right? Those are going to be your highest probability setups. Why? Because there's buying and selling pressure at those areas, and there needs to be buying and selling pressure to form a breakout, right? Notice how there's no volume here, but then when session came in, look at how much volume had actually changed, especially when it came down and grabbed liquidity in this area. Notice how volume started to slowly pick up, and then we just had a big explosive move, right? Again, what causes a breakup is the speed of which these orders are coming in. So imagine there's people probably will buy limits in this area here. There's people probably will buy stops here. At the same time, there's people with stop losses on sells over here. So once all those orders get triggered and all those orders flood into the market, you're going to have a huge breakout like this. And that's when you have the big moves. And these are the moves that make money. When you trade from zone to zone, look how big this move was. And especially on a commodity, it's not like GJ, where in GJ, this could potentially be like, I don't know, let's call it 60, 70 pips, right? This is a few hundred pips, right? Even on a standard lot size, you're going to make a few $1,000s. And these are all things that you have to wait for. You have to focus on the best setups possible. Stop trading the garbage setups, because essentially what you're just doing there is you're putting good money with bad risk. There's no point in that, right? You really want to focus on quality control and limiting the amount of trades that you're actually taking. Now, I could tell you this, but you're only going to be able to do that with time and with experience. So what I'm going to be waiting for is for price to actually come down into this level, right? If price comes down to this level and actually breaks this area, you wait for the pullback back into the level Wait for price to establish resistance. What could you look for price to actually establish resistance? Simple, your candlestick patterns. We have a bearish variation like this, or you can wait for a double top like this, where I'll then look to go short. And then you have to ask yourself, well, if price goes short in this area, where am I going to place my stop loss? Where am I going to place my take profit? My stop loss is going to be above resistance because, again, that level of resistance is there to protect my stop loss. If that level of resistance breaks, then we're looking to get out of the trade and cut that loser short, right? And then when it comes down to my targets, it's going to be the next level of support. And that's how I like to trade, from zone to zone. Now, when it comes to gold, the thing is, I'm a little bit iffy on gold right now, because if we look at gold, essentially it's almost doing the same thing as silver. But with gold, it's a little bit different because gold had rejected again 1797 another time, which we see that here, and we had price go bullish. But we've rejected 1830. We've also rejected these weekly highs and this weekly level of resistance. Again, notice once price tapped into this area, selling pressure came in and price dropped. Now we're trading at 1813, which is another level that I've been paying attention to on gold for quite some time. So price could potentially form support at this 1813 level. Also notice momentum isn't really too strong here. Now let's take a look at the daily timeframes and how the daily timeframe is acting, right? So essentially price had pulled back into resistance here. The following day, price ended up finding selling pressure, or price didn't find selling pressure. There was selling pressure at resistance where price ended up coming down to support, essentially forming a lower low, because this is that day's low and then this is this day's low, right? So price definitely did get lower, but sellers were met with buying pressure, and notice price went all the way back up. Then notice on the following trading day, price tried to break out higher, but it couldn't. So essentially what price is doing now is consolidating between these two levels, 1813 and 1830. Now, notice also that there's not really a lot of momentum, right? Granted, yes, it's a Friday, but on Fridays, we typically see big moves, right? Look what happened with GJ. That was a pretty big move, right? So I want to see what happens over the next few hours, because I'm going to be very cautious with gold, because if price can actually form some form of a double bottom, like on a 30-minute time frame at this level of support, then I'll look to take a buy back up to maybe this intraday high over here, which is going to be 1823, right? So as long as price can maintain above 1830 or 1813, most likely we're going to continue to trade higher. Now, if price actually does break 1813, again, same concept. Wait for the pullback into 1813. Wait until price establishes that it's one broken 1813, meaning that multiple candles form under that level. And two, wait for your sell signal being an engulfing, or however you take your entry signals. If you're a high risk trader, if you're a more conservative trader, ultimately it's up to you. Because again, right, the likelihood of this support or buyers holding this support is there, right? And if they're going to try and hold support again, once price breaks under, sellers are going to want to hold that area. And sometimes you have to understand that that break and retest setup won't happen, and price will just drop and drop and drop and drop, and you missed out. And that's just part of what trading actually is. When you focus on your core setups, again, you're eliminating as many mistakes as possible, and you're just focused on your trading plan and your trading setups. And these are my core setups, is buying at levels of support and selling at levels of resistance. That's how I like to trade. And again, it's all about that quality control. I won't mind if I miss out on the trade. Will it suck? Sure. I mean, I missed out on X amount of dollars, but there's always different ways you can actually wait. Notice that there's resistance in this area here. Let's say price breaks, but actually pulls back to here, and I identify there's resistance here. And it gives me a sell confirmation. Then, hey, I'm going to look for price to go short, and I'm going to sell here. This could be a potential structure level. Notice how price is forming market structure here, right? This could be a potential structure level here, stops here, targets here. That's how I'll take the trade. Again, you have to adapt. This is just the first setup that I see here on gold. Things could change. And again, let's just say price doesn't give me that break and retest. You just adapt and you simply wait. Where's the next level of support? Where's the next level of resistance? We have resistance here, and we also have support over here. Let me do this. We also have support over here. So if price breaks this area, I'm going to wait for the pullback back into resistance, because again, you only want to sell at resistance. You don't want to sell in the middle, because resistance gives us an area to protect our stop loss and gives us a high probability trade. And I'll take price into this first level of support. If this support breaks, then we're going to go to the next level of support. It's again a very simple concept, but it's easier said than actually done. The hardest part is actually waiting for it to play out. Most of the time when you're trading, you're not essentially always pressing that buy or sell button. Trading is a big patience game, and it is a big waiting game. You have to wait for those setups to actually play out. Once you see your setup and your setup's actually playing out, then you have to put predetermined risk behind it. Anyways, guys, that was the breakdown. That is my market outlook for the week. So you guys can unmute yourselves, ask me any questions. I'll be answering questions for, let's call it the next 15, 20 minutes, because I need to fix those sections in the course that have not been unlocked, and potentially even have to remake the content. So you guys can just start asking me questions.
Hey, Raul.
What's going on, bro?
You can hear me?
Yeah.
Yeah, I was gonna ask you, so you know how we got the different like time zones on when you should trade and stuff like that, right?
Yeah.
So when I sent you the whole little gold,
Wait, my bad, bro. Let me actually change my speakers here, because I can't, I can't, these headphones are, I can't really hear very well. It's not, all right, talk real quick.
You can hear me?
Yeah. All right, there we go.
All right. Nah, so basically I had a question about the whole time zones and when you're taking your trades.
Yeah.
So I was pretty confident on taking the sales, right, as you're seeing. But the only thing that actually held me back was during the the Sydney session and stuff like that. That kind of like makes me iffy about taking my trades, because anything could happen. What happens when you see a trade happening in a different session? And how do you go about that? Like when you want to take it, even though it's happening in the wrong session?
So basically what you're asking me is, what do you do when you see your setup in a different session? Well, in my situation, it also makes me very like iffy. Typically what you'll see happen is pretty much what happened here on silver, right? Well, I don't want to give this example because this wasn't my setup, but if we look at the timing here, right? Let's just say price was down here. It's still my setup. It's what I'm going to look out for.
Yo, I can't see it. I think it's frozen.
There we go. Is that better?
Yeah.
So this is still my setup. This is what I'm going to look out for, right? I'm still going to take this trade because the setup doesn't change because of session. What's the session does for us is bring more volume into the market. So essentially, session is either going to push price in your favor or push price against you, right? If you were going to be wrong to begin with, then you're just flat out wrong, and session is going to show you that. Now, here's a tricky thing. Sometimes what happens with session is liquidity grabs.
Yeah.
Liquidity grabs are very hard to avoid because, again, it's there to grab liquidity and to stop people out before the actual move. It also depends what time frames you trade. So if you trade a lower time frame, like a 15-minute, potentially even a 30-minute time frame, and you're just looking like for those quick scalps, you always want to wait for your session no matter what, because there will always be some form of a setup for you, right? Notice the break here. Notice on this 30-minute time frame, we broke above here and then price pulled back. It came down, gave us that retest. You could have gone down to like a 5-minute time frame and you would have seen that break and retest actually play out here. That's a setup for you, right? A break and retest here on this 5-minute time frame. And again, it's going to play out very quick because you're looking for a 5-minute move. You're not looking for a 30-minute move. You're not looking for an hour move, where these sessions are going to be playing out, you know, over the next 6, or these setups are going to be playing out over the next 6 hours, over the next 12 hours, right? You're going to be looking for these trades to play out over the next hour, 15 minutes, even at times, right? So it is a tricky question, but I do my best to wait for the setup. And something that helps me combat that is by not looking at the market consistently, which you don't want to be doing anyways, because you want to have a balance in your life, right? You want to have your times you're going to come on and do your pre-market analysis and then see what the market's doing there. maybe an hour or two before. If you're an hour or two before session, I would take the trade, no problem, because its session is right there, right? Not much is going to change. But again, what could also happen pre-session is that 7 a.m. candle opens up, liquidity grab, 8 a.m. candle opens up and price goes in your favor. You know, it's trading is a very tricky thing. And ultimately, at the end of the day, it's going to be up to you as a trader. Personally, from experience, you want to wait for session as best as you possibly can. But if I were to see my setup, like my bread and butter setup, I've seen this play out 1,010 times. I'm ready to put the money on the table, right? I'm going to take it, especially if we're not too far away from session. Now, if we're around Asian session, it's going to happen. You know, let's say your setup actually does play out, then it is what it is. You have to adapt to the market conditions, look for the next setup, you know, and move on. But hopefully that helped answer your question and helped you out, bro.
It did. I appreciate that.
All right, cool.
Yeah.
Real quick, Raul, could you explain again cutting losers short?
Yeah. So essentially what you're doing, or when I say cutting losers shorts, I mean, that is a term used throughout all trading. You know, when you trade the stock market, when you trade stock options, currencies, commodities, cryptos, everyone says you cut your losers short, cut your losers short. Or, you know, you can never go broke by taking profit. I am very iffy about that setup because I feel like a lot of newer traders will get confused by that setup. Does that mean that every time you hit drawdown, cut the trade? No, because essentially what you're going to be doing is you're going to be paper cutting your account, right? That's what I call it. Right? And you're going to paper cut yourself so much that you notice that you have a huge wound now, right? So instead of, you know, paper cutting your account, which again, when you cut your losers too short like that, it's counterproductive. What I mean by that is, let's say we see a setup here on silver where we see price actually break, retest, maybe even double top, and then price is going in your favor, and now you have your entry signal here, right? We determined that, hey, you know, this right here is going to be a good stop loss area, and this right here is going to be a good take profit area, because if price breaks above these two highs, right, then the probability for price to continue to trade higher is there, and I'm most likely wrong. So what I'm going to do is get out right here, and this is where you get out of the market. You don't postpone yourself getting out of a trade because you're hoping that price is going to go in your favor. Where you say you're going to get out is where you have to get out, and you made that decision when you're in a logical state of mind, because when you have live money at risk, you're no longer in a logical state of mind or thinking as logically as before, right? So many more emotions come into the market or come into your trading psychology. So when price does hit your stop loss, you have to have that discipline to close if you're not using hard stops, or you have to actually let your hard stop actually get hit and not get back in and cut that loser right then and there. Because what happens is you can have price continue to trade high and you keep adjusting your stop to here, then here, then here, then here, hoping that price goes in your favor. But then you see the trend actually ended up changing and price is trading up here now, and either you blew your account or you took a huge loss and you ate maybe weeks, potentially even months of profit, right? So that's what I mean by cutting your losers short. Does that make sense?
So you either let your stop loss get hit, or if you see price, because you explained in the course that price could be playing around your stop loss and the trade could still be valid.
Correct.
So you just let your stop loss get hit most of the time rather than just cutting losers short.
Well,
Is that how you move?
Because what I mean by that is, let's say again with the silver setup, let's say price is doing some sort of a double bottom and my stop loss is up here. Price could do all at once. It could do this as long as it doesn't hit my stop, because again, I determined when I was in a logical state of mind and I made the decision that this is a valid area, that if price hits this area, I'm most likely wrong. So if my entry is right here at this line and my stop loss is at this line, I don't care what price does, because again, the trade is still valid. The trade is no longer valid when it hits my stop loss. So price could fluctuate like this around for days and I have to wait for my trade to play out, because it's going to do one of the two things: hit your stop loss or hit your take profit. And you have to be patient enough for that. Now, if it goes to your stop loss area and you don't get out, that's not cutting your loser short. That's you holding on to your a losing trade and letting that losing trade run, which again, you never want to do. But you know, you do things as a beginner trader I personally don't know, where you're at in terms of like experience, but like a lot of beginner traders, what they'll do is they'll keep adjusting their stop thinking, oh, it's going to go in my favor eventually. It's going to go. It's going
Yeah,
to go.
I never do that. Yeah. I
Yeah.
usually let my stop loss get hit.
Yeah.
Or if I'm really like one of my last trades, I cut it short and price did hit my stop loss. So I'm actually glad I did that. But what I like what you're saying is that you're already making a decision when you're in a logical. So when you say in a logical state of mind, you haven't taken a trade yet. You're
Correct.
still setting up before
Correct.
you actually.
Yep. You don't
Copy.
actually have live money at risk.
Say again.
You don't actually have live money at risk. That's
Yeah.
when you're in a logical state of mind.
Yeah. Okay. So if you haven't made that decision, then you would just let your stop loss get hit.
Pretty
And-
much. That's what you have to do, because again, like, sure, there'll be times like maybe price is halfway to your stop loss and you close a trade and it does go to your stop loss. You're like, oh, I just saved myself X amount of dollars, right? But what if you close that trade and price is only halfway to your stop loss and you're like, you know what? I don't think it's going to go in my favor. I'm closing the trade, and price goes and hits your target. How are you going to feel?
Exactly. Like
Why
shit.
the fuck- Yeah, you're going to be like, why the fuck didn't I stick to my stop loss? You're going to be kicking yourself, right?
Yeah.
So again, like before you put live money at risk, you make these decisions when you're in a logical state of mind that you determine if price hits this area, I'm wrong, and this is where I will get out. And you don't want to tamper with that as best as possible, because again, you closing your trade early in a small loss is showing you that you're in an emotional state and you're wanting to close because you're seeing your loss get bigger and bigger, but it's not at your stop loss. And again, when it comes down to position sizing, you genuinely have to be comfortable with how much you're going to lose on that trade to avoid those emotions, right?
Yeah.
And that all comes with skill and obviously how much capital you have in your account. If you're trading 10 grand and you put a $2,500 stop loss, your emotions are going to be like this. It's going to be a roller coaster, right? Versus 10 grand and having a $100 stop loss, you're like, oh, it's $100. You know what I mean? It's 1%. It's nothing, right? So I hope that answered your question, bro.
Nah, it actually did. Thank you.
Yeah, of course, bro. No problem.
Hey, Raul, let me ask you a question.
What's going on, bro?
What do you suggest the time frame for beginners? Because I see you got it on the hourly chart. I mean, in different markets, sometimes people pull out more further away to see what the whole picture is as far as the movement. So what do you suggest? And then another thing, those moving averages, do you show what it is in the course or something so we can set it up like this?
Of course. So, I mean, when it comes to the moving averages, I don't know where you are in the course. You know what I mean? So if you haven't gotten there yet, I'm assuming you're not far in the course. Just take your time. You know what I mean? Just day by day. I don't want people rushing through the course because I want you to be able to soak in as much knowledge as possible and really grasp and understand what I'm saying. Like when people race through the course, they're asking me questions that I already answered for them in the course. They didn't really absorb the knowledge that I was giving them. So, but when it comes to choosing a time frame as a beginner, right, that's a little bit trickier because that comes down to your personality, right? If you're going to be swing trading, day trading, or scalping, right, it all comes down to your personality and if you're a patient person or not. Typically, people who are impatient and can't hold their trades for long will stick to lower time frame setups, 15-minute, 5-minute, right? They get in and out of the market, right? That's something that you have to kind of reflect on. You have to make those decisions. Are you a person that's impatient? Are you a person that's patient, right? Maybe you have some form of patience, but it's not all there where, you could be holding a position for days, potentially even weeks, right? So, I mean, trading is trial and error. You have to going to go through that trial and error stage. And a lot of people are like, you should trade demo. Yes, I agree. You should trade demo to get yourself familiar with the platform, to get yourself familiar with what trading actually feels like, and to see that it's actually possible. But real trading and really learning how to actually trade starts with trading live capital, because you go through the biggest learning curve, which is understanding how big trading psychology actually is, right? Trading ultimately, out of 100% of what makes up actually trading, 15 to 25% of that is technical analysis, fundamental analysis, risk management. 80% of that, 80 to 75% of that is all trading psychology, right? So I recommend try out focusing on these intraday timeframes to start off. So 30-minute time frame, 4-hour time frame, is where you're going to be looking to take your trades, and you're going to be looking to take your trades from level to level. Example, right? On silver, I identify that here we have resistance. Here we have support, right? Notice the break, the retest, the rejection, right? So you would take a trade maybe from this point up here to this point down here, whatever the case might be is, right? Because this trade took about, it's an hour time frame. This trade took about, let's call it 4 hours to play out, right? Look at how you were look at how your emotions were playing throughout there in terms of patience, right? Were you able to really sit down and let the trade play out, or were you very anxious once you made your entry for price to go straight to your target? If you're a person who's very anxious, then maybe you want to focus on an even lower time frame than the hour time frame. Go to a 30-minute, go to a 15-minute. I mean, at the end of the day, we want to use all of the time frames, because what we're doing is we're tying in the time frames together to make that decision on where the market is going to potentially go, right? But how long have you been trading for?
No, I just started. The reason I asked this, because I've been on the crypto side and it's similar. So that's why I asked that question. I've been trading crypto for like 4 years now.
It is very similar. But yeah, you just, if you just started like day trading, like either, commodities, currencies,
Yeah.
it's going to be, it's going to be a learning curve.
Okay.
But yeah, that's what I would do personally. I would start in the middle. I wouldn't start with swing trading. I wouldn't start with scalping. I would start right in the middle.
Okay. All right. That worked out.
Yeah. Anybody else?
Real quick, Raul, if I can grab you for a sec.
Yeah, what's up, bro?
I'm just wondering on 4 hour on GJ, do you think it's a big complex pullback? I'm looking to go long for the rest of the week, but and for me personally, from where the previous lows were all the way at the bottom there to the 38 being the higher low, it came into that zone. We're only starting to touch the 50 and 61.8 now. If you fib from the bottom section all the way up through that whole area.
You're talking about, okay, so on the 4 hour time frame, you're talking about a complex pullback to the upside or the downside?
Yeah, no, the upside.
I wouldn't say so, no, because one, this is a range of consolidation, right? Clearly price tried breaking out of the consolidation range, but now it's pulling back into the range, right? So if we look at the 4 hour structure, what we see here, the main structure points is high, high. We see here low, lower low, lower low. So this is all structure right here, right? So basically, what I see with GJ, and this is all based off the week, the daily time frame. The daily time frame will be the foundation of why I take this setup. This is a support, a resistance level. If I zoom out here and get rid of this, we have resistance here as well. Again, notice how price retested here, support, support, and price closed under support or above support here as well, showing us that price could potentially continue to trade higher. So I see price actually going bullish for GJ. Now, I know that price, I know that price is going to go bullish, right? I ask myself, what could I possibly wait for price to actually give me that buy signal, because I'm automatically going to look to buy? Simple. Where's my nearest level of support? Well, we have support here when we have resistance here. I'm either going to wait for price to pull back into this support where I'll look to buy if support is established, meaning that we have rejections, right? Or I'm going to wait for price to break, pull back into this support, and wait for those rejections where support is again established, and then look to take the buy there up to the next level of resistance. So that's what I'm waiting for on GJ, and that's what I see on GJ.
Yeah, for sure, for sure. Cheers for answering that. I was going long anyways, but I just saw a massive complex, well, what I thought was complex on 4 hour, but all good.
Yeah, no, it's fine. I mean, ultimately, like, you always want to trust in your own analysis. You know what I mean?
Yeah, I mean, the bias was correct, but just like the entry point. The risk to reward wasn't great on it. It was like a 1 to 2.5 or something like that. It wasn't fantastic.
On what?
On GJ right now, from where I was going to enter. I was going to enter on 4 hour and have it below the lows, but it was obviously like really overextended from like an optimal entry would have been.
This?
Yeah, similar. Yeah.
Yeah, I wouldn't take that trade either, just because it's,
Yeah.
1 to 2, it's not really something I'd be more interested in.
Mm.
I mean, you could always jump down to a lower time frame and look for a pullback and
Yeah.
trade it off an
I was
income.
waiting for a break above the 30-minute highs and the retest on that, but you've already marked it
Yeah,
out.
yeah, yeah, pretty much the
Yeah.
same thing I'm waiting for.
Yeah.
Yeah, the same thing I'm waiting for. Cool. Anybody else have any other questions?
I got one.
What's
Hello?
up, bro?
Can you hear me?
Yeah, what's up?
So okay, let's say let's go to let's say you have a setup on GU, right? So some people would, like me personally, I took my entry around like 4 hours just because I like my lifestyle, right? But
Yeah.
some people would take an entry on an hour. So let's do say on an hour it did a break and retest, but on the 4 hour candle, like let's say it's still going, and then when it closes, it shows me say like a shooting star type of candle on the 4 hour. Yeah. So fuck, how should I? Yeah, some shit like that. Like, would you follow more on the 4 hour or an hour time frame with
the thing is-
regards to like
If you're looking for a
Structure.
4 hour, if you're looking for a 4 hour move, you have to use 4 hour stop losses. You can definitely enter based on a lower time frame, but your stop loss has to be the same for that 4 hour structure, because you're looking for that 4 hour move, right? It's going to take a lot longer for that setup to play out, and price could just kind of consolidate in between the entry and your stop loss. So you want to make sure, as long as your stop loss is in the appropriate area where you determine, hey, this is where I'm going to get out if I'm wrong, then it doesn't really matter ultimately if you enter like on an hour time frame,
okay.
right? Because I mean, everybody's going to trade very differently. Some people are going to wait for that 4 hour signal. Some people want to get maybe a more aggressive entry, so they take like an hour signal, right? But as long as your stop loss, take profit, and risk reward is good, then you're pretty good to go.
Okay. Thank
Yeah.
you.
Yeah, no
Yo, what's
problem.
up, bro? Can you hear me?
Yeah, what's going on, bro?
Yo, I only like to trade New York session. Should I trade tomorrow or should I just back test with bank holidays?
I would back test. I mean, you could like risk it and trade GJ, right? But that's not risk I would be comfortable doing. Again, I'm not here to tell you, what to do with your trading. 'Cause it's your money, you're gonna do whatever you want. I would just recommend that if you're a New York session trader, right? The whole point of New York session is when the US banks open up and the stock market opens up and more volume comes into the market, right? So there's not really going to even be like big moves for the New York session over there, unless like huge companies are doing transfers. But even then, the banks are closed, so that's all going to be put on pause, right? So in a situation like that, I would just back test.
Alright,
Maybe
for sure.
see what the market did.
Yo, I'm in oh my bad.
Now you're good. All I was gonna say was like you still want to check the market, you know what I mean? But I wouldn't actually be placing orders if you're trading New York.
For sure. Thank you, bro.
Yeah.
Yo, I'm in gold shorts right. I'm silver shorts. And
Okay.
since tomorrow's the holiday, you think I should close out? Or should I just hold it?
I mean, if you're already in, the thing is like, because it's a holiday tomorrow, it doesn't mean that price won't go to your target, right? But there's an increased risk because again, what moves price is supply and demand and volume, right? So since there's going to be not as much volume as when the banks actually are open and are making transactions, I would potentially thing is we could see gold or silver move during London because there are moves during London session. Like this move was during London session. But the majority of the moves that happened on gold and silver happened during the New York session. So you could definitely hold it. Wait and see what price is doing when maybe London session ends. If you haven't hit your target yet, at that point in time, if price is getting closer to your take profit, or maybe you're in profit and it's getting to break even and session is about to end, I would personally close the position. But that's just me and how I would do things.
Yo, Raul.
What's going on, bro?
So for losing streaks, how do you manage losing streaks, and when do you start risking less? Like when are you in losses to? I mean, damn, I like messed up there. So I mean, until how many losses do you start risking less?
Typically maybe after like 4 or 5 losses in a row, I'll start turning down the risk. Because ultimately, if you're risking a percentage on your account, let's say you're risking 2-3% on your account, right? Your risk is going to decrease as your account balance decreases as well, because you're risking 2 or 3% of your current account balance, right?
Yeah, for sure.
But when I notice, I'm like, damn, you know, I'm in a big losing streak. I've lost 5 trades in a row. I'm going to go to a 1% risk until I start winning those trades back again, just to again mitigate the risk, because what losing streaks come in different forms and sizes. You could be in a losing streak for the period of a quarter, but what that looks like is, and this is going to be in like in weeks, right? How I'm going to draw this out. What that looks like is you're going to have maybe a winning week here, right? You're going to have a losing week. Maybe then you're going to have a little winning week here, then you're going to have a bigger losing week. And that's just the amount of trades that you're actually losing. Maybe you'll win like 2 trades here, lose 4 here, win 1 trade here. And these are just kind of random examples, but they come in waves. You could think about losing streaks as even potentially as trends at times, right? Where, you know, you see your account literally making lower lows and lower highs, and then ultimately it kind of breaks up to the upside. It depends on the losing streak. I've gone through losing streaks where I've noticed that I lost maybe, I don't know. There's just so many different examples I could give. Ultimately, you want to focus on risk reward the most and quality control when you're in a losing streak. Typically, you're not going to realize you're in a real losing streak until you've lost, you know, 4 or 5 trades in a row. And then at that point in time, and it also depends on how you trade. I mean, do you take like 2-3 trades a day, right? Or do you take 1 trade a day? It's such a like overall like big topic that I could just branch off and, you know, talk about like all these other subcategories within that topic. But how you deal with them is going to be up to you to find out, and how you are with your personality. How I deal with them is I lower risk, I lower the amount of trades that I'm taking, and I look for higher quality setups with higher risk reward ratios. It's basically what I do.
For sure. Appreciate that, man.
Yeah.
I was actually reading Trading in the Zone, and it was like one of the hardest parts for me was like trying to accept the fact that every moment is unique, because like we tend to associate the previous, or I guess our previous trades, and we think it's gonna win just because it won in the past.
Yeah, of course.
And that shit, like expecting you being right like that, that's what really fucks with me.
Yeah, you have to treat each trade individually and forget about yesterday's trade as best as possible. Obviously learn from the mistakes, but each trade, it's its own individual trade. Just because you lost, you know, the last 4 trades doesn't mean you're going to win the next one. You could lose the next 4 trades after that, right?
100%. Yeah, for sure.
You have to play out the math, and you have to play out the probabilities, and that in the long term you will be profitable. You have to stick through that, because again, you know, you can have losing months where you're down maybe 10% on the month, you're down 20% on the month, but in the following month you make all that back plus more because of risk to reward ratios, right? Losing,
yeah, it's crazy. Like you could lose like 6 trades in a row, and two winners will just like eat all of that up.
Exactly.
Crazy.
Exactly. That's why I don't always try and focus on win rate. I focus on risk to reward and the setups that I'm taking.
Awesome.
Appreciate that, brother.
Yeah, Bruno, of course.
Well, first of all, I just joined.
Yeah,
I just say hello to everybody. Pleasure to meet you, Raul. My name is Jay.
Nice to meet you, bro.
I was in the futures market for almost 2 years. What do you recommend me? And of course, I've been following you, and that's why, you know, I joined the institution and everything. I would like to join the futures market, but what do you recommend me? What platform? I'm doing MetaTrader 5 with futures, but it's not working really good with futures because
what pair are you
it's synchronized. Excuse me?
What pair are you trading? What pairs?
Asset. Nasdaq.
Okay, NAS 100. Bro, you can trade that on MetaTrader 4.
MetaTrader 4.
Yeah.
But I would like to trade what you got. What do you trade? I mean, you know,
I also trade the Nas, I trade the Dow, I trade US 30. I mean, well, the Dow is US 30. I trade the S&P 500. I do trade those assets as well. It's just my primary focus and what I want to be good at is ultimately gold, silver, but I have my list of markets that I trade. You can add those to your portfolio and have that in your watch list. So let's say like I have, well, ignore BTC. I just like to follow BTC price. I have, what is this? 3 or 6 assets here that I trade. I'll skim through, or not, I won't skim through, but I'll do an analysis on all of them, maybe like an hour or two before session, and I'll determine which setups I see are the best based off of these pairs. And I'll choose the best 1 or 2, and I'll trade only those, right? Because when we're trading, 30-minute time frames, hour time frames, we may not have setups every single day. That's why I like to keep my list pretty big and pretty broad. So continue trading futures and take the style of trading, the methodology of trading, and apply that to the futures market, because I do the same thing. And I've had crazy days in the futures market. So like if you go on my YouTube channel, like you'll see like videos like how I made 50K on FTMO, like I was trading US 30. You know what I mean? You can take the same concepts and apply them to different markets for sure. Especially if you've already been trading them, why not continue? You know what I mean?
Absolutely, absolutely. But can you recommend me the broker? Because I have AMP futures. Can you recommend me another broker? And also I open 2 corporations for for the trading. That's the best way to do it, right? With the corporation, LLC, and I have an S corporation too.
Yeah, personally, I run my trading through my trading profits through my business. But taxes are a little bit different, especially when you're using unregulated brokerages, because then you're going to be dealing with like cryptocurrency and everything else. So I would definitely let your accountant know what you're doing, right? Saying that, hey, there's a brokerage over here. I'm trading on an unregulated platform that doesn't require a tax ID or social security number, but I have to buy cryptocurrency, deposit it in here, and then my withdrawals are going to be coming in through cryptocurrency and then into my bank account. How would you recommend me to do that? Someone will say, okay, either you want to trade under a corporation, you can trade under a corporation, or if you want to trade under a personal, which most of the times, you're from what I've seen is you're trading and withdrawing to your personal, and you're paying that fat ass tax bill. Me personally, nowadays, when it comes down to my trading profits, let's say I do a $50,000 withdrawal, right? If I don't need the money, I'll leave it in crypto as an investment. And maybe if I want to go spend it on something like a piece of jewelry, it costs me X amount of dollars, I'll try and buy it in cryptocurrency. Or if I have to put in the bank, I know, let's say I need $25,000 to pay for X, right? I'll withdraw, I don't know, I'll withdraw $35,000, pay the taxes on the 10, which after taxes leaves me with the 25. Like, I think is I try not to talk about taxes too much because I'm not a licensed tax attorney.
I get it.
Yeah, but that's just from, to help you guys out as a student, things that you could do.
Absolutely.
Yeah, but in the meantime, I would definitely find a good tax attorney that deals with traders. And get their advice on things and how you're going to do things.
Sure. That's for sure. But so MetaTrader 5 is not good.
Yeah, MetaTrader 5 is what I use. MetaTrader 5, MetaTrader 4. They're basically the same platform. Just MetaTrader 5 is newer, and MetaTrader 4 actually is going to stop supporting MetaTrader, or MetaQuotes is going to stop supporting MetaTrader 4. So it's a good thing you're already on 5. You just again, when it comes down to the broker, I'm gonna be testing out a new broker this week. If all goes well, I'll let you guys know maybe by the end of the week.
Please let me know. Like the only thing that I have is because the MetaTrader 5 is more for Forex and not for futures, and I didn't know that until like today.
Yeah, well, you can still use, again, you can still use it. And I actually prefer the MetaTrader platform because it's a lot simpler than using like TD Ameritrade or their Thinkorswim platform. You know what I mean? It's a lot simpler. It's very user friendly, and in terms of like actually buying into the market and buying contracts, it's all based off lot sizes We have indicators to tell us how much the risk parameters are. It can be, you know, that's a platform that I use. That's a platform that I'm familiar with.
Yeah.
So I recommend that, you know, you test it out, see how you like it. And the brokers that I use only offer MetaTrader or maybe even CTrader or NinjaTrader. But yeah, that's what I recommend.
Perfect. Do you don't know anything about the platform, like a multi-shard, something like that?
No,
No, not good.
I don't know.
Got it. Yeah, man, because in the futures market with the MetaTrader 5, like
Yeah.
let's say you close in a positive trade, and then later you find out like 2-3 hours later, they like put it in negative for some way, like synchronization, something like that. Like crazy.
Yeah. Like when I was trading stock options through Chase, right?
Uh-huh.
It takes so long to refresh. Like I would see my trade is clearly in profit,
Yeah.
right? And I'm waiting for it to refresh. I'm refreshing it. I'll be down maybe 3-4 grand, and then I'm up $10,000. And when I close my trade, I actually only profit $6,000 because it took so long for, you know, it's annoying. That's the thing I like about MetaTrader. It's all instant, right? You see it live. So if you're in profit 5 grand, they're gonna show you you're in profit 5 grand, and you close it, and they're like, it's a great platform.
So you use MetaTrader 4 in your broker, because my broker AMP futures, you cannot do forex in the MetaTrader 5. So can you recommend me a broker, or you're gonna say that you're gonna test one this week and you let us know?
Yeah, 100%.
Thank you, Raul. I really appreciate it. Thank you, my man.
Of course, no problem.
Hey, Raul.
What's going on, bro?
Hey.
What's up?
So basically, if let's say you're in drawdown, how do you like, and your overall bias is like still valid, how do you actually like scale into more positions, or do you just stick to your current position and let it run? I mean, like, provided you're not over risk, like you're just risking like 1.5%.
So have you got into you new to the course?
Yeah, I've been training for like 6 months now. But yeah, to detail, yeah.
The day trains, you new?
Yeah, I'm new.
Yeah, so I actually have a video on that that goes more in depth than what I'm about to tell you. But personally, I always like to enter one position and hold that position to my target, because like the levels that I'm trading, I'm not swinging, right? So I'm not like entering multiple positions, like, and the dynamic or strategy is something else. But like, let's say price is consolidating this area here, right? And my target is this white line. And let's just say my stop loss, forget about the risk reward, let's just for the sake of answering the question, let's say my stop loss is here. Let's say price gives me the first reject, and these entry signals are going to be, you know, don't actually pay attention to them. I'm just giving you examples, right? So let's say I have a risk parameter and I'm comfortable losing 2% on a trade, maybe even 3%, right? Let's say on this price, I'll take an aggressive entry for 1% risk, right? With a stop loss up here. Let's say price pulls back all the way over here, and let's say I take another entry here, I'll add another 1% with the same stop loss up here. And then let's say price almost hits my target, but it pulls back and the trade is still valid and price goes down under another position with a 1% risk, my stop loss is up here. And I've scaled in to a trade at a 3% risk instead of 3% right off the bat. Right. And I'll wait for the trade to play out. So I'll set like a max of what I want to risk on a daily basis. Even for a trade, depending on the quality of the trade and the type of the setup that it actually is. I'll do that, especially at these major areas. We know that there's going to be a little bit more consolidation because there's decision making. And that's how I was scaling, basically.
So like, what are the like different time frames you use? Is it like 1 hour, 30 minutes?
Yeah, hour, 30 minute. Honestly, 30 minutes is my favorite time frame. But you've got to use all of them.
All right.
Yeah.
Use all. Yeah.
Do you never do like a scalping or just more?
No,
swing?
I'm more intraday focused. I mean, I can't scalp, but I'm more intraday focused.
Got it.
Just because of risk to reward reasons.
Perfect.
Hey, Raul, would you be able to look at AU real quick? So I saw that it had a bearish move like the last 2 days, but looking on the daily, it still looks like the structure still for like lower high, higher lows.
Mhm.
But I'm just trying to see what it maybe is gonna do this week in a sense.
Thing is, I don't like doing analysis on pairs that I don't trade because I
Okay.
don't know how they move. But like let's pay attention to the weekly time frame, right? You always want to
Okay.
start off on the weekly. What we see here is that we have structure here, we have structure,
Uh-huh.
here, we have structure here, right? We also have support down here, right? With this weekly candlestick, clearly buyers tried pushing price above structure to actually continue to trade higher. But there was selling pressure and price ended up closing back under structure or closing back under resistance, essentially, showing us
Yeah.
that there is selling pressure at this area. Right now, we go down to the daily time frame. What we see on the daily time frame here is that price has rejected these highs up here, closing back under resistance. Right, big sell signal here, big bearish variation pattern. Right, and essentially, price really still is in a bearish trend. Right, ultimately, like it's gonna vary. Right, this could be a different type of pullback. But again, like if we look at the structure, what we see is this.
Yeah. Mhm.
But we know that overall we're trending bearish, right?
Got it.
Price could go down from this area, especially if it maintains under this area. I would want to see price come down to here, essentially, and then if
Got
it's that area, maybe even come down to here. But you're gonna have to be cautious with this area right here where we have this structure level because we
Okay.
support in this range. You can see that price rejected that support level. So if you're gonna trade it from like an intraday time frame perspective,
Yeah.
right? We know that we have support right here, so we mark that off. Here is support, right? You go down to like 30-minute time frame, right? Which that support level should be this black line right here. Is it? Let me mark it off better. Let's call it right here. 30-minute time frame, right? So what you could wait for, or what you could look out for is notice how price already broke under this structure level, and it held, since this was the first area for you where you could have actually sold. Why? Because we have the break, the retest, rejection, and down. So where are we going to go to now? The next level of structure, which is over here. You just simply look left, right? It's over here.
Yeah.
So what you could wait for again is break, retest, looking for price to go down the next level of support.
Got it.
Would
All
you
right, bro.
consider that like
Appreciate it.
a 3-leg extension
Where?
right there, like or not?
Because you have 1, 2, 3, 4, 5, 6 down. Maybe let's check the hour. Yeah, I mean, no, I still wouldn't. You have 1, 2, 3. This is a 3-leg. Yeah.
That'd be like almost like, I mean, the way I see it from where you're looking at it is like it's already on a downtrend, right? And it's just doing like a little complex pullback, and then it might just come down more, right?
Yeah, basically. That's why I say see
Okay.
price continuing to trade lower. Yeah.
So
All right, everybody. So I'm gonna end the webinar in the next few minutes, like at 9 o'clock. So I can get this other stuff worked on. Anybody else have any other questions that they want to get in?
I'm sorry, Raul. Those moving averages are the 20 and
Yeah, the 21 and the 50
21 and 50. Thank you.
SMA.
Yo, I've been meaning to ask you, I keep forgetting. Like your sessions indicator, you know what I'm talking about? Like the one that's like the London. Yeah, which one do you use? Cause like the one that I have is ugly. That shit, it looks like shit, I don't know.
This one, I don't know.
I'm gonna just take a picture of it, bro, cause
It's literally just called sessions.
Yeah, I promise you, I think I've clicked every single one of them and none of them look as clean as that one.
I don't know. I mean, you could always change the colors.
What colors do you have it set on? Because maybe that's the problem.
Red, brown, and red, or green, my bad. Green, brown, and red.
All right, for sure.
Yeah. And then,
Yo, we outside tomorrow or what?
what's tomorrow? Oh,
Oh my God, bro. I'm okay because I saw you were practicing the wheelies today.
yeah. Nah, I'm not gonna ride with that.
Nah, don't. I had a bad experience like 2 years ago and I promise you I never rode again.
All right. Any other questions?
Raul, I
Hey,
have a
bro,
question.
that sessions indicator, you got to get the one that say AU rocks, bro. That's the best one.
AU rocks.
Yeah, that's the one that look clean like that. AU rocks.
Okay, we'll check it out.
All
Hey,
right,
Raul.
thank you, bro. I'll check that one out too.
Hey, Raul, can you hear me?
Yeah.
All right, so I'm new to the course, but I came in late, but I just wanted to, so I'm watching GU. I just came in, but I just wanted to see if I had like a right approach to it. I just wanted to like run through it real quick with you because I didn't hear it, but just a quick like 1 minute breakdown with you. So what I'm seeing is that I see on the weekly that it's making lower highs, and
Yeah.
I draw the Fibonacci, got a 71.8 on the weekly.
From here?
Yep, from there to the lower, 71.8. Seeing that I drew that level. So there's the level of support to the left of it, where I see, it's resistant. I mean, level of support right there. So it's approaching that level of resistance. Seeing on the daily that it did come back down below that level of resistance. So I do have a line right there. So it's below it. So what I'm looking for on the 4 hours, since it broke structure, seeing that now it's placing like into a lower high. If it comes back up to that level of resistance, would you take a trade from there?
A sell?
Yeah, a sell. So I have that line drawn on it, but it looks different on mine. But
I wouldn't take the sell if it comes back up to resistance, because if we look at it, right, black line there, daily, what will that look like on the daily?
so if it comes back up to the daily, it would test the daily again, but it would be a double, well.
It'll be pretty much forming a bullish engulfing on the daily time frame, because now it's back up to here. And on top of that, yes, price did break this minor level of structure, but let's look at the moving averages and how clean they are. And also we still have the 50 SMA right here, along with this level of support down here. So if this level of support actually holds, I'll look to buy. If it breaks, I'll wait for the retest and then look to sell. That's what I would do.
Okay.
Which, to be honest, I don't think we'll see buys until maybe, it depends how fast it gets down to here. Yeah, maybe Wednesday we might see buys, but
All right. All right, no problem. Thanks, man.
Yeah.
So Raul, so how are you gonna let us know through the chat or to apply for the broker?
I'll let you guys know through the chat.
Thank you.
Yeah. I'll let you guys know through the chat. All right, cool. So anyways, I know there's a lot of new faces on here. We're gonna try and schedule an introduction for the next webinar. So I'll do a little bit of an early webinar so I can actually meet everybody that's actually new. And I'll give a little introduction for myself, either before or after the webinar, probably gonna be before the next webinar, just so I can get to know you guys. But really quick, I want to say thank you guys for coming on. Hopefully you guys did enjoy